loan size. So inherently secured loans are taken because you can borrow significantly more than a personal loan. So if you have a good relationship with your bank, in the main you can borrow maybe up to £30,000, but you're certainly restricted on the term. So you can, generally speaking, at best get that over 7, at a push 10 years. But of course, what does that mean? The payments are significantly higher.
Yes.
And so with a second charge, coming back to what I think I mentioned before, you can run it alongside your mortgage. So if you have 25, 30 years remaining on the mortgage term, you know, again, assuming you meet other criteria, you can stretch it over that term, thus reducing the payments. One thing I would say, and you know, this is the truth, is that, you know, if you're looking to raise small amounts of money and you can afford a shorter term, then absolutely personal finance is, you know, generally the best way to go. But we are generally then talking, you know, up to amounts of 15,000 over 7 years where payments are affordable. But if your gut is telling you that that's going to be a stretch, that is essentially where a second charge definitely comes into play. Because, you know, if it's affordable and you don't need to secure against the home, why would you? You know, but that's where a lot of our, bear in mind, our average loan size on a second charge, to put it into perspective, is £65,000.